The plan to impose taxes on financial investment, which has been unpopular among investors, is set to be scrapped after years of delay and debate. For this topic, our finance correspondent Moon Hye-ryeon joins us in the studio. Hye-ryeon, what exactly is the financial investment income tax?
So it's pretty much exactly how it sounds. The financial investment income tax is a tax that imposes levies on profits made on financial investments. And this includes domestic stock investments above 50 million Korean won, roughly 35,000 US dollars, or 2.5 million won, just under $1,800, from overseas stocks, bonds, and funds. A 20% tax rate will be applied to the portion of profits exceeding their respective thresholds, and the rate increases to 25% for annual profits exceeding 300 million won. This tax was passed into law under a bipartisan agreement back in 2020 in an attempt to create a more equitable tax system. Currently in place is the capital gains tax system, where only large shareholders holding shares worth 50 billion won or more in a single stock, or owning a 1 to 4% stake in the company, are subject to the capital gains tax. There's also the securities transaction tax, which is levied on the act of trading stocks rather than on capital gains. The securities transaction tax rate has been gradually decreasing in recent years, as it was to be phased out for the financial income investment tax.
And walk us through the timeline and why this plan is being revoked before it's being implemented.
So originally it was set to be implemented in 2023, but its implementation was pushed back to 2025 as the tax was met with strong backlash from investors. And the Yoon administration pushed to repeal the law in order to stabilize the stock market. And just last week, the Democratic Party expressed support. Investors in South Korea worried that the financial investment income tax would discourage active participation in the stock market, leading to reduced trading volumes and potentially higher market volatility. As a new tax is imposed, individual investors are inevitably resistant to taxes, and there are concerns that large investors who influence supply and demand will sell off their holdings to avoid the financial investment income tax, leading to a decline in stock prices. Individual shareholders also felt that it favored institutions and foreign investors, as they would not be subject to the financial investment income tax. Although foreign investors pay taxes to their own governments according to the double taxation avoidance agreements, they could be indirectly benefiting from the financial investment income tax due to the reduction of the transaction tax rates.
If we eliminate the financial income tax, then the government may have no choice but to maintain the transactions tax for revenue purposes.
The administrative procedures of the financial investment income tax were also a burden on individual investors, as taxes would be withheld in advance and investors would then have to file a final tax return with the tax office to receive a refund for any overpaid taxes. President Yoon Suk-yeol further claims that it was important to abolish the financial investment income tax before South Korea's government bonds are listed in the prestigious World Government Bond Index next year. Experts say that this is to maximize the benefits.
The government is using the opportunities presented by Korea joining the WGBI, which affects the bond market only, to also get some attention on the stock market, and abolishing the financial investment income tax is perhaps one way of doing it. But there are some...
And how are markets responding?
So immediately following the news, the country's benchmark Kospi jumped by more than 2%, and the tech-heavy Kosdaq recorded its biggest rise in 3 months as it surged by 3.43%. Here's what an expert said about why the Kosdaq can anticipate more gains from the repeal.
With a large concentration of individual investors, the Kosdaq market is particularly sensitive to changes in investment taxes. The repeal of the financial investment income tax has significantly boosted the attractiveness of the Kosdaq market for individual investors.
The domestic financial market has been unstable following the U.S. presidential election, so this latest move is expected to help reduce some uncertainties.
Domestic individual investors had been pulling back from the stock market, and some funds were flowing overseas. The repeal of the financial investment income tax has significantly reduced these uncertainties.
All right, thanks, Arirang, for the report.
Thank you for having me.